Hello everybody, welcome to the PowerPoint presentation. This is basically on accounting on finance. What finance is going on with accountants, its importance, is it financial performance, its management, its positions, its improving financial statements and the ratio analysis. I'll explain it alongside throughout this presentation. So I'll be starting off this presentation by presenting my title page on the slideshow tab from beginning. Accounting on finance. Now let's go on to the first slide where it starts with. The first slide it starts with is about management. Management is planning, organising, directing and controlling a business. The most important and challenging is control. The process of analysing, evaluating and interpreting the production and financial performance of a business. So that's what financial management is about. Next slide is about information. What's financial information? It can and does come from many sources. Some of the best and most needed information can come from each business own financial and production records. This next slide will be explaining about the systems on in the financial position. So the systems need to be implemented that allow for only unnecessary records, keeping an effective use of records. Summary information for those records should be invaluable in day-to-day business decisions. Okay, now this next slide is more about the financial management. The four types of the management is going through the process is the planning, the organising, directing and controlling. Management control. So the best decisions that require the best information. And again, it's the number one most important part of the financial management, the control theory. If you don't have any control and management, you're in finance, it will be shut down. It will go into loss, and then it will go immediately. The whole business sector will all go bankrupt, and then that's when the consequences start. So, the most important thing is you need in management is control. You need to control the financial performance of each employee and the banks and accountants in finance. This next slide is about the uses and purposes of financial records. So the first one is management decision making. The second one is income tax reporting. And the third one is credit acquisition. So those are the three circuits of the uses and purposes of the financial records. So let's go to the next slide. This slide will now tell us about the keys to successful records keeping. So, excessive detail often ends in confusion, frustration and failure. Meet your needs, abilities and limitations. Accurately match expenses with income. This next slide is all about the keys to successful records keeping. Know your purpose for keeping records. Fourth example is income taxes. Second example is the management, and the third example is banking. So those are the most structural purposes for keeping records in finance and accounting. But this is all about to tell us about the accounting rules. So the rules in accountants. So the standard of communication, Generally Accepted Accounting Principles, GAAP, which stands for Generally Accepted Accounting Principles. So those are the rules about accounting. This is all about the financial analysis. So it requires objectives. So the objectives are measure financial condition, measure financial performance, measure financial condition, and then all business owners should have a basic set of financial statements at their disposal, and they should know how to analyze and interpret them. So that's what financial analysis is. This is all about the Accrual-based records. So transactions are recorded when they take place and regardless of whether cash is involved. Yeah, that's very good. This is all about more accrual adjusted statements. Cash-based records are kept throughout the year. Non-cash adjustments are made to the cash-based income statement at the end of the year. That's a great layout. That's very good. This is all about the income statement of accrual adjusted. Cash incomes and expenses must be adjusted by changes in non-cash assets. For example, stock, prepaid expenses and receivables. Changes in non-cash liabilities. Examples are payables and accrued interest. So they're good examples. Very important examples. This is all about the basic financial statements. Trading and profit and loss sheet, balance sheet and statement of cash flows. These are the workings that you need to do when you're doing financial statements. These are very important. When you don't have them, then more likely your business is going to fail more whatsoever. That's what I'm learning at the moment in finance. I'm more learning on doing trading profit sheets. I'm also doing balance sheets, and I'm also analysing of what cash flows are and handling financial statements in finance. These are the basic steps of sums of how you find these, how to analyze these steps. So equity equals to assets minus liabilities, and there's another one is assets equals liabilities and plus equity. So equity is mostly related to debt and equity ratio. So that's one of the ratios that I learned in finance. Assets, current assets, and then I done breakdown of current assets, liabilities, current liabilities, and then I involve liabilities with assets, and then I have to find relate those two to the breakdown of the current assets with the closing stock. That's what I have to do in my assignment in finance. This is about a chart. Is about a balance sheet. So the left section is about the assets, liabilities, and equity, and that relates to the net income. And then the right side is the ending of the balance sheet. Same again. So equals or minus net income, plus or minus valuation changes, minus capital withdrawals, and plus capital contributions. So that's the basic chart on how at the end and to begin a basic financial balance sheet. This is the last slide of the entire presentation. It's just to tell us what are the types of the ratio analysis. The first one is liquidity ratio. The second one is solvency ratio. The third one is probability ratio. The fourth one is financial efficiency. And then the fifth one is repayment capacity. So that's it. Now I'm going to check the accessibilities and the slides. Okay. Okay. Accessibility does not relate to any spelling errors, only checking slides does. So when you check slides, then if there's any spelling errors, the check slides will help you analyze those errors, and then you can fix the issues. Just wait for this to load. Again, let's check this slide. No issues. No issues in this slide. No issues on this slide. No issues in the management slide. Management control. No issues. Okay, it's very good so far. No issues. Keys to successful record keeping slide. Let's check. Nope, no issues. Next slide is the record keeping. Now the accounting rules. Very good. Now the financial analysis. No issues. Accrual based records. Accrual adjusted statements. Okay, accrual adjusted income statement. The basic financial statements. Equity equals assets minus liability slide. The beginning and ending balance sheet charts. The final slide ratio analysis. Yeah, there's no errors on the slide, so that's it. So no problems except accessibility. It doesn't relate to any spellings, but just the layout and the structure of the icons and the text. Well, not really text, but mainly icons and images that are on these slides. It's not a problem. The slides are all checked. There's no issues. All spellings are correctly spelt and inputted. So that's it. And now I'm going to end this presentation, and that's it for today. That is the end of the accounting and finance. So thank you all for watching. I hope you all have a nice day and see you all very soon. Adios.